Right then, let's get into it. Money, something we all use every single day but rarely stop to think about. It's more than just notes and coins in your wallet or numbers on a screen. It's a living, breathing system that's constantly on the move, changing its value and shape in ways that can seem mysterious, even a bit magical. But what's really going on behind the scenes? You work hard for your money, but have you noticed how currencies, dollars, pounds, euros, are always shifting in value, like cars racing for the lead? One day your holiday money stretches further, the next it barely covers a coffee. These ups and downs aren't random. They're the result of a global tug-of-war, with countries, banks and traders all pulling in different directions. It's a high-stakes race and the finish line keeps moving. This constant jostling is the foreign exchange market, or Forex, and it affects everything from your holiday spending to the price of petrol. Every time you travel, shop online or even fill up your car, you're feeling the ripple effects of this market. It's the world's largest financial market, with trillions of dollars changing hands every single day. And yet, most of us barely notice it until it hits our wallets. This week's been a wild ride in the currency world, thanks to some big moves by central banks and a pesky gremlin called inflation. Central banks, those big serious institutions, have been making decisions that ripple across the globe, shaking up exchange rates and making headlines. Inflation, meanwhile, is quietly nibbling away at the value of your money, making everything from groceries to gadgets more expensive. It's a double whammy that's got everyone talking. We'll break down what's happened with the dollar, pound, euro and yen, and why it matters for you. No jargon, just real-world examples. Whether you're planning a trip, running a business, or just trying to make your paycheck go further, these changes affect you. We'll show you how to spot the trends, what to watch out for, and how to make sense of the headlines so you can stay one step ahead. So grab a brew and let's dive into the bonkers world of global currencies. By the end, you'll see money in a whole new light, and maybe even have a few tricks up your sleeve for the next time the markets go wild. Let's start with the US dollar, the world's most influential currency and the backbone of global finance. Whether you're traveling abroad, investing in stocks, or just following the news, the dollar's movements ripple across the globe, affecting everything from the price of oil to the cost of your next vacation. It's the currency that sets the tone for markets everywhere. Think of it as the pace car of global currencies. When the dollar accelerates, others try to keep up. When it slows down, the rest of the world feels the drag. Its direction can signal confidence or concern, and this week, it's been a wild ride. On Friday, the dollar managed a small surge, catching the attention of traders and analysts. But if you zoom out and look at the bigger picture, the story changes. Over the course of the week, the dollar actually lost ground, continuing a downward trend that's been building for months. In fact, it's on track for its worst annual performance since 2017, a sign that deeper forces are at play. So, what's behind this shift? Investors are increasingly betting that the US economy is cooling off after a period of rapid growth. There's a growing belief that the era of high interest rates, used to fight inflation, may be coming to an end sooner than expected. The Federal Reserve's signals and economic data are being scrutinized for any hint of a policy change. When new inflation data came in lower than expected, it was a wake-up call for the markets. Suddenly, traders started to rethink their strategies. The result? A rapid sell-off, as investors moved their money out of dollars and into other assets, searching for better returns or safer havens. That Friday bounce, it was just a blip, a reaction to short-term headlines rather than a true reversal. The real story is the dollar's steady, long-term slide, as more and more investors anticipate that interest rates will fall, making the dollar less attractive compared to other currencies. In the world of currency markets, it's not just about what's happening right now. Traders are always looking ahead, trying to predict the next move, the next policy shift, the next global event that could shake things up. It's a constant game of anticipation and reaction. The dollar's journey this week is a textbook example of the tension between short-term noise and long-term trends. While headlines may focus on daily ups and downs, seasoned investors know that the bigger picture tells a more important story. So as the dollar moves up, down and all around, remember, It's the underlying trends and future expectations that truly drive the action in global markets. Imagine a sneaky gremlin lurking in your wallet, nibbling away at your cash every single day. You don't see it, you don't hear it, but over time your money just doesn't stretch as far as it used to. That gremlin's name? Inflation, the silent villain of our story. It quietly erodes your money's power, making each dollar, pound or euro worth a little less with every passing year. You notice it when your weekly shop costs more, or when your favorite coffee suddenly jumps in price. It's when your tenner buys less than it did last year, making everything from bacon butties to housing pricier. Even the basics, like bread, milk or rent, start to feel just out of reach. Inflation doesn't just hit luxury items, it creeps into every corner of your life, quietly raising the cost of living. A little inflation is actually healthy. It keeps the economy ticking, encouraging people to spend and invest rather than hoard cash. But too much inflation is like an engine running too hot. It overheats, and suddenly, households everywhere feel the strain. Budgets get tighter, savings lose value, and financial stress rises. This week, there was a twist in the tale. US inflation dropped to 2.7%, surprising experts and signaling that the economy is finally cooling off after months of high prices. Economists and investors alike watch the numbers roll in, trying to predict what might come next. That unexpected news sent the US dollar tumbling against other major currencies. Markets quickly shifted as traders bet that the Federal Reserve, the US central bank, might soon cut interest rates to keep the economy balanced. Central banks fight inflation by raising rates, making borrowing more expensive and cooling spending. But with prices finally easing, the pressure's off. Now, policymakers can breathe a little easier, and the focus shifts to supporting growth without letting that gremlin return. The market's already recalculating its next move, just like drivers eyeing the next corner on a racetrack. Investors, businesses, and everyday people are all watching closely, ready to adapt as the economic landscape shifts. This week's drop in inflation was the catalyst for a global currency shakeup, a reminder that even the quietest gremlins can cause big waves in the world of money. Central banks use interest rates to steer the economy, raise them to fight inflation, lower them to boost growth. High US rates made the dollar strong, attracting global investors. But with inflation cooling, the Fed is expected to cut rates soon, making the dollar less attractive. Investors are already shifting money elsewhere, causing the dollar to fall. It's a global race. Higher rates mean a stronger currency, but only as long as they last. This week's soft inflation data convinced markets the Fed's next move is a cut, not a hike. That's why the dollar stumbled, and why everyone's watching what comes next. In currency markets, expectations move faster than reality. Across the Atlantic, the Bank of England cut rates for the first time in ages, signaling inflation is finally cooling. But the pound barely budged. Why? The bank's cautious tone suggested future cuts will be slow and limited. Investors see UK rates staying relatively high, keeping the pound steady. Meanwhile, UK retail sales dropped, hinting at economic weakness. Experts expect a couple more small cuts next year, but nothing dramatic. The pound story is one of cautious optimism mixed with worry, a very British affair. For now, the currency holds its ground. Over in Europe, the ECB kept rates steady at 2%, unlike the UK and US. This wait-and-see approach made the euro look relatively strong, even as the dollar and pound wobbled. The ECB upgraded its growth forecast, signaling confidence in the eurozone's resilience. But not all is rosy. German consumer sentiment is dropping, raising concerns for Europe's biggest economy. The euro held steady, caught between central bank optimism and consumer pessimism. Investors see the euro as a safe bet for now, especially if US rates fall. The ECB's steady hand supports the euro, but risks remain. Europe's currency is holding its own, but the road ahead is uncertain. Japan's always been the outlier. Ultra-low rates, weak yen. This week, the Bank of Japan hiked rates for the first time in years, hinting at change. But instead of rising, the yen fell. Investors had already priced in the move and wanted more. The BOJ's cautious message about future hikes disappointed markets. So, investors rushed back to dollars, and the yen dropped. It's a classic case of buy the rumor, sell the fact. In currency markets, expectations matter more than announcements. The yen story shows how unpredictable things can get. All this currency drama hits home in real ways. A weaker dollar means your pounds buy more on US holidays or American websites. For Americans visiting the UK, it's pricier now. Businesses importing US goods benefit from a cheaper dollar, but European imports stay steady. If you send money abroad, exchange rates directly affect your family's income. Currency moves ripple through travel, shopping, and remittances. Central bank decisions shape your everyday spending power. The Forex market isn't just for traders, it's for everyone. If there's one lesson, it's that currency markets are brilliantly unpredictable. Markets react to expectations, not just reality. Sometimes good news makes a currency fall if it's not good enough. Currencies move in relation to each other, not in isolation. A crisis anywhere can send investors rushing to the dollar, flipping the script overnight. Inflation, interest rates, growth, politics, so many moving parts make predictions tricky. Understanding the basics helps, but even experts get it wrong. The global currency race never ends, and surprises are always around the corner. And on that bombshell, it's time to end. Good night.